Karnataka High Court on October 24th pronounced its judgment in the case involving the closure of 6 Franklin Templeton Mutual Fund debt schemes. The order restrains Franklin Templeton Investment from winding up its debt fund schemes without prior consent of the investors. Here's what it means for the mutual fund investors of the schemes in question. The 6 schemes by Franklin Templeton, including Franklin India Low Duration Fund, Franklin India Ultra Short Bond Fund, Franklin India Short Term Income Plan, Franklin India Credit Risk Fund, Franklin India Dynamic Accrual Fund, and Franklin India Income Opportunities Fund were frozen on 23rd April 2020. This action, however, was stayed by the Gujarat High Court on 3rd June. The Supreme Court then transferred the Gujarat case along with others filed in Delhi and Chennai to the Karnataka High Court on 19th of June and asked it to hear the matter expeditiously. A division bench of Chief Justice Abhay Asoka and Justice Ashok S. Kinagi on October 24th directed the fund house to obtain the consent of its unit holders of the 6 debt mutual fund schemes before winding them up. The Securities and Exchange Board of India, or SEBI, also drew flack from the Karnataka High Court for its handling of the Franklin Templeton crisis that led the asset manager to shut 6 of its debt schemes. So will Franklin Templeton debt investors get the money back now? Well, the court ruled that the disbursal of funds will depend on whether or not the decision of the mutual fund trustees to wind up the scheme is held to be valid. If it is held to be valid, money will be returned to all investors after repaying borrowings and the expenses of liquidation. If the decision is held invalid, money will be paid to those who give redemption requests. Will Franklin Templeton move Supreme Court now? Well, in an email communication to investors after the judgment on Saturday, Franklin India's head Sanjay Sapre said, "While we are still in the process of studying the order, basis our initial review, we believe it may be necessary to appeal aspects of the order in the Honorable Supreme Court." Now, if the Supreme Court grants a further stay, it is unlikely that any money will be returned until the top court decides the matter. So what happens if unit holders do not give their consent about winding up? If the Supreme Court grants a further stay, a unit holder's vote may be held anytime soon. If a vote is held and the outcome is negative, the schemes would have to be reopened and redemptions would have to be processed. This can force the AMC to sell its holdings at huge discounts in order to raise money. However, the AMC may undertake steps such as restricting the withdrawals of more than 2 lakh rupees per unit holder for a period of 10 working days in order to deal with the large redemption requests. But for now, the Karnataka High Court ruling clarifies the procedure for winding up of mutual fund schemes and establishes the right of mutual fund unit holders to give or withhold consent for winding up of the mutual fund schemes.